interesting to me, and I want to just put this out on your radar, so pay attention to the data. They're saying that we got a 25 basis point cut today. Now, for the next about 3 meetings, they're expecting that we're going to get a hold. This is January, no rate cut. March, no rate cut. April, no rate cut. And then June 2026, about a 25% basis point cut. Now, here's the interesting point about this. Remember how I told you that the market likes certainty? Anything can change. We might not get 3 holds, but whenever you get something that is off of what is expected, the market could react negatively, as it usually does, and then bounce back because it could be a positive thing, but the market is looking for certainty. So if we get 1, 2, and 3 holds on the market, and people just continuously lose jobs, and the economy just gets slightly worse, and inflation is going up, it all sounds bad. But sometimes on the market, bad news is good news, and I'll tell you why. Because if you expect bad news, it'll get you the certainty if you got bad news. And the market doesn't like uncertainty. So if we hear more jobs are being lost, are you surprised by that? No, I'm not surprised by that. So we're getting certainty. So then this is why we are about $3 away on SPY from all-time highs. Even after all of the fear with Michael Burry, even after all of the fear with the rest of the bears. And I was having a talk with Josh right before we got on this live stream, and he was saying that there are some people who SPY is $3 away from all-time highs. If you are down severely in your portfolio, you're just not playing the game right, because we are almost at all-time highs. So you have not even felt any of the pain. So Josh, I hope that you wanted to expand on that.
No, I love it. Matter of fact, you brought me right into my next question. I'm going to take 20 seconds to show you guys the SPY chart and to make a very, very simple point, and then I'm going to come back and ask my guests their opinion of it. So you're looking at the SPY, you're looking at weekly candles, and I'm going to keep it very simple. Back here, we had a very ugly candle. It gave us this minor pullback to the 20 EMA, and then we bounced. I want to point out the volume nodes at the bottom. They're all pretty big. 1, 2, 3, and this last one was huge. And now we've gotten into the buying game where we pushed higher than this candle that started the sell-off. We pushed above it, but on extremely low volume. And this last candle, which of course we're not finished with the week yet, we've got 2 more days, but it still doesn't look, unless we rip in the next 2 days, this one is also looking pretty small. And so to Keenan's point, if your portfolio got crushed, then you might have been in some extremely high-risk plays and didn't take profit. Because the market, we are literally right back here at all-time highs, inches and centimeters away from the top. And, the big question is, if you've been in this much pain and we haven't even begun to fall, where would your money be if we actually had a legitimate pullback of 10% or so at this point? But I guess I'm going to throw this back to you, Larry. The market's sitting absolutely near all-time highs. What is the next catalyst that is going to push us higher right now? Or what is the next problem that the market's going to use as an excuse to go down? What do you see on the horizon? People, I know that I'm going to talk a little personally here. When I first started trading, in my first couple of years, I only understood how to trade the market one direction. It was up. Every bit of money I made at the beginning or lost was all based on the idea that something I was buying had to go up. When you get into this game longer, you start understanding how to do shorts, you understand how to buy puts, you understand how to buy inverse ETFs. But I know, just thinking back on my past, that if this is somebody's first 1 to 3 years, they probably haven't even begun to look at that. And the big question they're asking is, should I buy the Magnificent 7 right now? Based on what I just went over, what are your thoughts on where we're positioned? Do we have a reason to go higher, or do we have a reason to go lower? What do you expect going into the end of this month?
Well, we got to look at three things. So, these last 3 years, since COVID, things have changed in the stock market, good people. And I've been doing this for a little while, and I try to be a forensic scientist, so to speak, right? And Josh, you guys realize that it was only a couple, maybe every quarter we were dependent on the Fed for the market. Now it's every single FOMC meeting since 2020, right? Why? Because inflation got out of hand. And so now it was all about the Fed. In 2021, nobody was thinking about the Fed. Remember?
Yeah.
Money was cheap. It was a bull market, blah, blah, blah. Nobody was studying the Fed. Now every meeting is about the Fed and how he can save the stock market. Well, here's what I'm looking at. We may not get a Santa Claus rally. We may trade sideways for a while. But I think after today's FOMC meeting, we kind of put the FOMC meeting and the Fed decisions to bed. This was the last meeting of the year. It's already priced in one in Q1, so one more rate cut, and he's pretty much a lame duck, meaning he's done. He's just in the position. That's off the table. The market can go up without the Fed cutting rates. If the Fed is correct and inflation starts to decrease, then we don't need the Fed anymore. Now we got to look at GDP growing. We got to look at the overall economy growing, because that's the big, beautiful bill. That's where the upside is. There is money printing in the big, beautiful bill. That big, beautiful bill has a lot of liquidity that's going to find itself to the market, right? So we need GDP to keep growing, and we need earnings to keep growing. That's what we need. We need good earnings. Now we got to look at Q1 earnings of next year to bring the market higher. Other than that, we're just kind of sideways because the market is still frothy. And I do expect a 10 to 20% pullback sometimes next year. I'm gonna leave it at that.
You dropped a bomb on me there at the end.
Yes, sir.
I'm gonna come back to that. I did love your commentary. I basically heard three things. We have some sideways trouble that we're at right now because we are frothy. There is this ongoing risk of a pretty severe pullback in 2026, whether it happens, as a result of Q1 earnings, or whether it happens, as a result later in the year, that you think that we're going to have to face a bigger leg of volatility, but you're confident in the overall market rallying in 2026. Did I get that about right?
Correct.
All right.
And I expect after the 20% pullback, then I expect the market to continue to go up. And I suggested that in bits and pieces even on my page before Tom Lee even said that. I've just been saying the market is still frothy.
All right. I'm curious. We're going to build off of Larry's commentary, Mo, if you don't mind. I want to quickly, before I do that, just ask you guys to hit that like, and remember, check out these guys on their YouTube.